The pandemic forbearance benefits for federally held student loans have been extremely beneficial for all of us. This constant threat of restarting repayment and then extending again and restarting and extending, it just adds to the overall uncertainty and confusion and, what do I do? And I'm not really sure what I should be doing, what I shouldn't be doing. And it's been going on for more than 2 years now, right? We have to, just be aware of what's going on, always be kind of knowing what it might look like again and thinking what our budgets would look like if and when we do re-enter repayment. And then also just reviewing our current student loan portfolio so we know exactly what status our loans are in and how we can actually take full advantage of the benefits as long as they last.
That is student debt expert and VIN Foundation board member, Dr. Tony Bartels. And this is the VIN Foundation's Veterinary Pulse podcast, special student debt series. I'm Jordan benShea, Executive Director of the VIN Foundation. Join me and our co-host and VIN Foundation board member, Dr. Matt Holland, as we talk with veterinary colleagues about critical topics and share stories. Stories that connect us as humans, as animals, as a veterinary community. This podcast is made possible by individuals like you who donate to the VIN Foundation. Thank you. Please check the episode notes for bios, links, and information mentioned. Hey there, Tony. Welcome back.
Hi, Jordan. Thanks for having me again.
Again, we're back again.
Yeah, again.
We're back again with VIN Foundation board member and student debt expert, Dr. Tony Bartels, to talk about what else? The latest in student loans. On April 6th, the Department of Education extended the loan pause payment again through August 31st, 2022. And for those that might have been hiding under a rock since COVID, this pause includes the following measures for eligible loans. So suspension of loan payments, 0% interest rate, and stops collections on defaulted loans. Tony, we're back here again, and there's just more information as always. And I can only imagine, you're living and breathing this, and there's confusion. I can only imagine what this is like for our colleagues out there who are probably really confused. So let's just dive right in. Where do we start?
Yeah, it's while the pandemic forbearance benefits for federally held student loans have been extremely beneficial for all of us, this constant kind of, threat of restarting repayment and then extending again and restarting and extending, it just adds to the overall uncertainty and confusion and, what do I do? And I'm not really sure what I should be doing, what I shouldn't be doing. And it's been going on for more than 2 years now, right? So I've kind of lost track of what the official count of how many times this has been extended. I've heard anywhere between 6 and 7 at this point. And, it may even get extended again, right? So we have to just be aware of what's going on. Always be kind of knowing what it might look like again and thinking what our budgets would look like if and when we do re-enter repayment, and then also kind of just reviewing our current student loan portfolio so we know exactly what status our loans are in and how we can actually take full advantage of the benefits as long as they last. And there's going to be benefits that extend even beyond when we officially re-enter repayment. And that's the part that is, I think, probably the trickiest. Everybody really focuses on, okay, well, what's the next end date for the suspension? And we know the next end date, it's August 31st, 2022. And if it expires on time this time around, then, we'll all re-enter repayment afterwards. And some of us don't even know what that's going to look like yet. But along with that deadline, there are extensions to a lot of other things that are associated with student loans, right? So we talk a lot about income-driven repayment plans because they tend to be very beneficial for veterinarians and anyone with a student debt-to-income ratio that's greater than 1. But typically, we have to provide annual documentation of our income, and we haven't had to do that. And
Mhm.
and this has probably been one of the largest sources of confusion for those of us that entered the pandemic forbearance using an income-driven plan or applied for an income-driven plan during the pandemic forbearance is, when do I have to provide my documentation next? And by all accounts, that has been pushed to at least March of 2023, and for many of us, it's probably beyond that, right? So even if the benefits end August 31st, we would roll into repayment under the same monthly payment we entered during the
Mhm.
pandemic forbearance, or if we had our payment adjusted for any reason during the pandemic forbearance, it would enter that monthly payment, and we wouldn't have to provide a documentation again until at least March of 2023, which is the current date, which also can move if we get another extension.
Right. And it seems like a lot of colleagues are just, that's one of the main questions we get in our webinars and, different conversations that we're having are, how do I submit my income? How do I submit my income? Where can I do that? Where can I do that? But on the flip side, we've heard of some people submitting their income and then their payment turns out to be higher, right?
Right. Yeah, and that's unfortunate, right? I think some you know I think at the very beginning, and generally the posture of the loan servicers through this is, if you're going to send income documentation and it's not going to result in a lower monthly payment, they're not going to process it. But if you keep sending it to them, they may recalculate your payment, and you may not
They
like
are
the result.
for-profit companies.
Right. Well, right, but I don't think they don't necessarily get paid based on what your
Right, right,
monthly
right.
payment is, right? So it's the- you know you don't want to submit the income documentation if you don't have to, and particularly if that income documentation is going to result in a higher monthly payment than you had previously, right? So this is where it pays to be smart about, what status are your loans currently in, what repayment plan are they in, what was the minimum monthly payment, or what will the minimum monthly payment be when we come out of the pandemic forbearance. And if you were to provide additional income documentation at this moment, what would that monthly payment be? Right. And
Hmm.
I think a lot of our colleagues find this to be mysterious, and they just rely on the loan servicer to tell them what that monthly payment should be. But you should really do that calculation ahead of time. I do that every time I submit income documentation to my loan servicer. Now, I haven't had to do that for more than 2 years now, but I do that calculation ahead of time, so I know exactly what to expect as the result. And if they tell me something different, then we're going to have a conversation,
Hmm.
right? So you,
Hmm.
you you should know what that payment is going to be going in, and it's a really simple equation, right? So the discretionary income calculation takes your taxable income, it subtracts off 150% of the federal poverty guidelines for your family size and where you live in the US, right? And if you don't want to do that math yourself, we've got that calculated out in a variety of blog posts on the vinfoundation.org website. Or you can use the VIN Foundation Student Loan Repayment Simulator, and you put your taxable income in there, your family size, your tax filing status, your spouse's income, and it'll show you what your payment should be for this year, right? And if your loan servicer is calculating something different, then there needs to be a discussion on why that is.
Hmm. And so since you mentioned, taxable income, we'd be remiss if we didn't mention the
Yeah,
fact that taxes were due yesterday. So
that's right.
and we regularly get people saying, how does this impact what I file from a tax perspective? And what if I don't need to file taxes? Should I still file taxes? And so there seems to be a lot of confusion around that as well.
Yeah, so this gets really into the weeds, but can also help really maximize these pandemic student loan benefits, right? So there's a lot of
Hmm.
us out there that benefit from filing our taxes separately once we're married to have a lower student loan payment, right?
Hmm.
Oftentimes, because we're dealing with some pretty big student debt numbers, if we can separate our income from our spouse using a plan like income based repayment or pay as you earn, by filing our taxes separately and having our payment based only on our income, um, we can save more money, right? We may pay a little more in taxes, but we save more in our student loans, so it justifies doing that. The pandemic forbearance shut off all of our student loan payments, right? So we haven't had to make any payments. So that incentive to file your taxes separately, specifically for student loan purposes, has been temporarily removed, right? If you
Hmm.
don't have to make a payment, and the next time I provide income and documentation isn't until 2023 sometime, right? Then I can safely file my taxes jointly for this 2021 tax filing year, And even if I wanted to go back and amend my tax filing for the 2020 year,
Hmm.
right, to receive the joint tax filing benefits, because it's not going to adversely impact my student loan payment because the payments are shut off. So you can use this information to your advantage. And if you want to take that additional step, I have worked with some colleagues who have, amended previous tax returns that they filed separately from their spouse to reflect a joint filing status, and have gotten a refund for a prior year. Now, I think you can only go back maybe 3 years in the past to do that, but you don't need to go too far
Mm-hmm.
back, right? Because the pandemic forbearance benefits have been in place for a
Right.
little over 2 years. But if you wanted to, and you were so inclined, or you work with an accountant that wants to help you do that, it could be worth your while, right? You could get, thousands of dollars back from the IRS just by changing your tax filing status.
Right. And that's one of those things that there's so much confusion around. And I think, we keep hearing from borrowers and colleagues like they feel like they've got to do something, right?
Mhm.
Like they keep hearing like this has been extended, this has been extended. But I think some of them are starting to get pretty nervous, right?
Yeah.
And so they're like, what should I do? What should I do? I've got to do something. I've got to do something. And submitting the income update, maybe not the best idea if that's going to increase your payment. But there are a lot of things that you can do. And you listed a couple of them earlier. And as always, of course, everything that Tony's talking about, the links and everything will be in the episode notes. But let's sort of look at sort of like a bulleted list of what you recommend if somebody's looking at their loans. What is that overall view?
Yeah, the first thing I would encourage everyone to do is their physical exam, right? Their annual
Mm-hmm.
physical exam of
Okay.
their student loans, right? So before you take the next step and call your loan servicer, or officially do anything with your student loans, just do a physical exam, right? So just like we do with our patients to assess what's going on, do your annual physical exam on your student loans. So that entails obtaining your student aid data file from studentaid.gov. And we have a video on the VIN Foundation My Student Loans page on how you can find that information. But everybody who has federal student loans has a detailed federal student aid data file that contains all of the hairy borrowing history that you have with the Department of Education. And that is going to tell you everything you need to know, right? So, but nobody wants to read the information that's in that file. So in the VIN Foundation Student Debt Center, we built some tools that can help summarize that information and show it to you in a more favorable fashion, right? It serves as a way to double check your loan servicers, right? So what your loan
Mm-hmm.
servicers are telling you, what information you're seeing in your loan servicer portal. That student aid data file serves as kind of a independent check on what your loan servicer is telling you. And once I upload that file, there's a lot of valuable information in there, right? I'm not only going to see my balance and, any unpaid interest in there, but I can also see what repayment plan are they listing for me, right? If I was using a repayment plan, like an income driven plan, prior to the pandemic forbearance starting, or if I applied for one during the pandemic forbearance period, I'm going to see that repayment plan name listed in my loan details, right? If I haven't officially chosen a repayment plan, I may just see forbearance listed, right, to indicate that I'm in this pandemic forbearance period. But
Mm-hmm.
that's a little unsatisfying, right?
Right.
If you think you're in a repayment plan and it says forbearance, well, that would trigger to me. Well, now I might want to make a phone call or reach out to my loan servicer to say, hey, what repayment plan do you officially have me in?
Mm-hmm.
Right? Because if I don't see a repayment plan listed there, and particularly if I don't see an income driven repayment plan listed there, then, you know, maybe you haven't selected a plan, right? Or you're in a standard 10-year plan, or, some other repayment plan that maybe is not counting towards forgiveness. You'll also see in that My Student Loan Summary the income driven repayment eligibility tab, right? So we've got some algorithms that will help determine which repayment options you're able to use. And you could choose any plan that you want, right? But the income driven plans have some pretty goofy qualification requirements based on your loan types and when you started borrowing. I do see a lot of people that are using plans that may not be the most beneficial plan for them. So,
Mm-hmm.
checking to see, what plan am I listed in? Do I see income-based repayment there? Am I actually eligible for pay-as-you-earn? I'm using revised pay-as-you-earn, right? So that's the things that I'm looking for. I mean, I I first am looking to see if someone is eligible to use pay-as-you-earn, because generally speaking, that tends to be one of the most beneficial of all of the federal student loan repayment plans, and particularly the most beneficial of the income-driven repayment plans. But I see a lot of people that are eligible for that not using it, right? So I'm looking at that income-driven repayment eligibility tab. Are they eligible for pay? Are they actually using pay-as-you-earn? If not, why not? I'll also see anniversary dates in there, right? So when you use an income-driven repayment plan, you'll have an anniversary date, and that anniversary date is when you're normally required to provide that updated income documentation so you can have your payment recalculated. During this pandemic forbearance period, there is no requirement for you to provide annual income documentation unless your income has decreased. Right? If your income has decreased, they'll recalculate your payment lower to reflect that lower income that you're currently earning. Right? But your anniversary date is going to show you when you're next due to renew. Now, we also know from the pandemic forbearance details that no one is required to renew before March 20th, or I'm sorry, before March of 2023. Right? So
Okay.
if you see an anniversary date in your file that's between now and March of 2023, you can ignore it, right? You won't be required to provide documentation until at least March 2023. But that date that is listed there is an indication that your new renewal date will probably be 1 year from the date that's listed in there now, right? So let's say that your renewal date in there is listed as November of 2022, right?
Mm-hmm.
So that's between now and March of 2023. We know that you won't have to renew in November. No one is going to have to renew until March of 2023. But that renewal date that's in there that says November of 2022 indicates that your next renewal date will probably be November of 2023, right? Under the
Okay.
current
Mm-hmm.
guidance. So that is a helpful indicator of knowing when you're next due to renew, which again is extremely beneficial, right? If I'm a recent grad and my recent tax returns have not been very robust because I haven't had a full year of income documented yet, and I still have a $0 monthly payment under a plan like pay as you earn or something really low because I did an internship or something, there's a good chance that that payment's going to extend well into 2023, if not farther, right? And that tends to be more beneficial in terms of helping you with your cash flow to do other things like working on your financial wellness, building emergency funds, saving for
Mm-hmm.
retirement, saving for the down payment on a home, starting a family, all of these other things that people are generally postponing because they feel like their student debt is, needs to take first seat.
And we've heard about some colleagues who have gone ahead and made payments during this time because they just felt, oh my gosh, I feel like I should be paying something,
Mhm.
right? So, but we also know that, if they don't have to be making payments. So if they have made payments, what are their options?
Yeah, so the choice, the decision of whether or not to make payments is complicated. From a financial standpoint, while it could be beneficial for you to make payments, it doesn't necessarily make sense to make payments regularly during the pandemic forbearance period, right? So there's a couple of different ways that you can approach this. If your debt to income ratio is less than 1 and it's quite likely that you're going to pay your student loan balance off before reaching any kind of forgiveness, then it can make sense for you to make some additional payments during this pandemic forbearance period, right? But I wouldn't encourage anyone to make regular monthly payments until we know when this is actually going to end.
Mm-hmm.
Right. So the payments that you might be making towards your student loans during the pandemic forbearance have the exact same impact as if you were to take all of that money, put it into some other account that's maybe earning interest, and make one lump sum payment the day before the pandemic forbearance period ends. Right. So if I were
Yeah.
in a position to benefit from making payments, I would hold off and make that payment on the last possible day of the actual pandemic forbearance period. Right. And we don't know exactly when that's going to be. Right now, it's supposed to be August 31st. So maybe I'll make that lump payment on August 30th if that actually comes to be
Right. If
the
there's
end
not
date.
another extension.
Right. Exactly. But it
Mm-hmm.
also provides me an opportunity to work on my budget, maximize all of those other critical areas of my financial wellness that I should be focusing on ahead of my student loans. And if I get to that point and still have some extra money on hand that makes sense for me to put towards some of my student loans while the interest rates are all zero, then I would do so that day before the pandemic forbearance period ends. Now, for those of you that have a debt to income ratio that's greater than 1, or it's highly likely that you will hit student loan forgiveness, it doesn't make sense to make any payments above what is required, right? So the pandemic forbearance period is extremely beneficial for those of us that are on track to hit student loan forgiveness. So there is no good financial reason to make an additional monthly payment towards your student loans. If you have, the good news is that you can request a refund of any payments that you've made during the pandemic forbearance period. So any payment that you've made towards your federal student loans between March 13th, 2020 and whenever the pandemic forbearance period ends, you can request a refund of those payments. You have to do that through your loan servicer, right? So you have to contact your loan servicer, identify the payment amount that you've made that falls within that calendar window, and request a refund of those payments. But I would do that if you have made
Right.
payments.
Yeah, if you're able to get that money back.
Yeah, and you can redirect those funds to those other more critical areas of your financial wellness.
Okay, so another thing that we're hearing from colleagues is it's kind of the Wild West out there right now in terms of what we're hearing and the information, but we're hearing some choosing consolidation. Can you help sort of, shine some light on that?
Yeah, and this is where it has been particularly messy for those of you that have graduated into the pandemic forbearance benefits, right? So,
Mhm.
2019, if you did an internship maybe or residency and deferred your student loans, or 2020, 2021, now 2022. We in the new grad playbook webinar that we do for graduating classes, and we'll be doing another one of those probably at about a month from now, so sometime in
Mhm.
mid-May.
Mhm.
We'll do a new grad student loan playbook, what you should do with your student loans to get started in repayment. And we often talk about the benefits of using a federal direct consolidation loan as soon as you can after graduation. The timing of that is critical, right? So the reason why we recommend that is because your veterinary school loans have grace periods, right? And your grace periods don't really count towards anything useful, right? They don't count towards forgiveness. Um, when the pandemic forbearance benefits are not in place, you're still accruing interest, which will then eventually get added to your principal. So the grace periods are generally not very beneficial when it comes to your federal student loans. So the only way to end that grace period early is through a federal direct consolidation loan, right? So even if you have all direct loans, and you technically don't need to consolidate to be eligible to make other loans eligible for a repayment plan like pay as you earn or revised pay as you earn, I still encourage people to consolidate their loans during their grace period immediately after they graduate, so they can officially end that grace period, get into an income driven repayment plan, get the clock ticking officially on
Mhm.
forgiveness. And if they do that immediately after they graduate, they can assure a $0 payment or a very low payment for the first 12 months of repayment, right? So the way the income driven plans work is you have to provide income documentation when you first apply for them. If you file a tax return in your last year of veterinary school, most of you are not going to have a very robust income. So that will assure that you have income documentation that will result in a very low or $0 payment for the first 12 months of repayment. Right. And if you end up hitting forgiveness, all of that stuff will be super beneficial for you. Right. And even if you don't end up hitting forgiveness, that buffer of having a very low payment due in that first 12 months will really help you get started with your overall financial wellness plan. Right. So there's a ton of huge benefits to consolidating immediately after you graduate. Now, the problem arises if you attended one of those new grad webinars, playbook webinars, and we told you that you should consolidate your loans and maybe you didn't do that, and it's now 2 years later and you're still in the pandemic forbearance and you haven't officially chosen a repayment plan. Now is not a good time to consolidate,
Mhm.
right? So the way that the student loan system is set up is if you do not choose a repayment plan after your grace period expires, you are technically in the standard 10-year plan payment, right? It's the default repayment plan that all of our loans go into if you don't choose something different. Again, technically, a standard 10-year plan payment will count towards forgiveness under income-driven repayment plans. Now, I haven't seen any guidance or any language around this yet because this is all pretty, new territory for everyone. But I hope and expect that those of you that haven't chosen a repayment plan after graduating into the pandemic forbearance period will technically be in that standard 10-year plan payment 6 months after your grace period expired, and that time will count towards forgiveness once we get to something that resembles normal repayment again.
Mm-hmm.
If you were to consolidate now, say you graduated in 2020, right, you would lose any chance of having that standard 10-year plan payment time count towards forgiveness, because consolidation physically replaces your old loans with a new one. So all of that prior history would be erased as well, right? So consolidation timing is extremely important. It's best done immediately or as close to graduation as possible. Uh,
Mm-hmm.
but if it's been a while, particularly 6 months since graduation, then you may really want to consider if consolidation makes sense for you at this point. It still can, right?
Mm-hmm. Mm-hmm.
Particularly if you have multiple loan types that might not be eligible for income-driven repayment, and you see yourself hitting forgiveness or working towards public service loan forgiveness, it can still make sense to consolidate. But at that point, it's probably you want to reach out for some help on how exactly to consolidate, because it might make sense to do more of a partial consolidation than a consolidation of all your loans to preserve any forgiveness time that you may have already earned.
So you mentioned how we had a webinar and we suggested consolidation, and as we talk about things change, and along those same lines, we did a webinar on April 6th, and since then things have changed or updated. So, we will have that link for that webinar and that webinar recording in the description, the episode notes. But Tony, what aspects of that do you want to talk to in terms of where things have shifted since then and the new information we've received?
Yeah, that's one of the reasons why I'm super excited to do this particular podcast, right? Because it gives us an opportunity to talk about the things we've learned just since we did the webinar a couple of weeks ago, right? So we did the webinar the same day the announcement was made that the pandemic forbearance benefits were going to be extended through August of 2022, right? But we didn't yet know all of the ancillary details about the renewal dates and when how long you could request a refund. And there's even a way for you to verbally, or not verbally, but self-report your income, right? And you can do that through studentaid.gov. That was supposed to have ended at the end of this July, but has since been extended through February. So if you do have to provide income documentation to your loan servicer, and maybe you don't have a tax return on hand, or a pay stub is not a very good representation of your income, you can actually self-report what that income should be, which is extremely beneficial, right? The prior to that option, you either had to go through your loan servicer and all of the problems that arise that way, or use a tax return, which sometimes isn't the best kind of documentation for everybody to use. So the self-reporting feature of income is extremely beneficial as well, and that is another date that we learned since April 6th, and that has been extended through February of 2023.
Great. Okay. So colleagues, where can they go for updates? They can go to the website. We'll make sure that they can also sign up for emails. Where else would you suggest they go?
Yeah, studentaid.gov is a great place to go. That's right on the web page, on the homepage there, they have the updated information on the pandemic forbearance extension. It talks in detail about the renewal certification guidelines and all of that information that we covered here. It's also where you're going to find your student aid data file, so you can do that student loan physical exam that we talked about. But I would really encourage you to take that information over to the VIN Foundation Student Debt Center. It's publicly available. Anybody can use that. Everybody does use that. Um, and it's also where our veterinary colleagues can get personalized assistance for their student loans, right? So if you're still
Right.
just really struggling, not sure how to make sense of what your loan servicer is telling you or what you should do, uh, if you're logged in while using the Student Debt Center, there's a link to the Student Debt Message Board area where we provide personalized assistance to help you work through those details. You can even post anonymously there. You get the answers that you need, and the rest of the community gets to learn from that experience as well.
Yep. That's a great resource. Anything else that you feel our listeners need to know about this news before we sign off of this episode? And I'm sure we'll be back very soon with more.
Right. And we'll stay on your toes, ask a lot of questions. Sometimes doing nothing is the best course of action. And in this pandemic forbearance benefits for your student loans, it generally is for a lot of us. But do that physical exam. Make sure you understand everything that you're seeing in there, because this is also a great time to try to correct some of that stuff that may not be exactly what you expected. While there's no interest accruing, there's no, this is really a great time to kind of fix anything that maybe you should have done and haven't gotten around to doing yet. So take advantage of this time. Make sure you're maximizing those benefits. And also focusing on your overall financial wellness, right? So being prepared and for what student loans are going to look like in our budget again, but also making sure that we're looking for opportunities to build our overall wealth while we don't have to make these student loan payments.
I think that's great advice. Thank you so much, Tony, for being with us again. I'm sure our colleagues are finding this very helpful. And we appreciate it. Thanks so much, Tony.
Yeah, thank you again for having me. And then we'll keep you posted on anything that changes.
Yeah, I'm sure we'll be back soon.
Yeah, no doubt.
Thanks, everyone.
Bye.
Thank you for joining us for this episode of the Veterinary Pulse. Please check the episode notes for additional information referenced in the podcast. If you enjoyed this podcast, please follow, subscribe, and share a review. We welcome feedback and hope you will tune in again. You can find out more about the VIN Foundation through our website, vinfoundation.org, and our social media channels. Thank you for being here. Be well.